This video is created by Jagrat Creations for you. This video is useful to the students who are reading for intermediate CA. This video is on amalgamation of companies. Amalgamation of companies is covered in the syllabus of Group 1 and Group 2 both of intermediate CA, means IPCC. This video is also useful to the students who are reading for BCom, means commerce graduation. They have got amalgamation of companies chapter in corporate accounting. This chapter is also found in the professional courses like CS Executive and also found in ICWA. I want to consider one important sum here before you. I request you to read the sum on the screen. This sum is adapted from university examination. Read it once. Then I'll take care of important points of this sum and solve it here before you. Just observe. The following are the balance sheets of Shail Ltd and Sheetal Ltd as on 31/3/2016. Assets at goodwill, fixed assets, stock, debtors, prepaid expenses, cash and bank balance, preliminary expenses and profit and loss account balances are given to you. On liability side also, this is the information given to you. It was decided to amalgamate both the companies and form Sheil Ltd. With 50 lakhs authorized share capital, ₹10 each. Conditions of amalgamation were as under. Equity shareholders will be given 4 equity shares of 12 each in Sheil Ltd against 3 equity shares. So, for 3 equity shares of Shail Ltd, 4 equity shares will be given by the purchaser. Number of shares are 12 lakhs divided by 10. So, 1,20,000 equity shares are there. For that, in exchange, 4 shares are to be given for 3 shares. Preference shareholders are given 5 equity shares. Notice that preference shareholders are given not preference shares but equity shares, 5 equity shares of ₹12 each in Sheil Ltd as against 4 shares. So for 4 preference shares, 5 equity shares will be given. How many shares need be given for 80,000 shares? 80,000 preference shares, share of 10 each. 14% debentures will get 15% premium. So 4 lakhs are the debentures, they will be given 15% premium. So 15 fours are 60, 4,60,000 is the exchange value for debenture. But how the allotment of debenture is to be given? The new company, the purchaser will give its debenture which fetch interest at the rate of 10%. So 10% debentures will be given for the purpose of making payment of 4,60,000, 4 lakh plus 15% premium. So 4,60,000 is to be paid out by giving debenture of 10%, each of ₹100 each, and that is to be given at a discount of 8%. So the 10% debenture of ₹100 each will be given at a discount of 8%. So exchange value of the debenture given is 92, and by giving one debenture, 92 gets paid. So, we want to make a total payment of 4,60,000. How many debentures are required to be issued? That we shall calculate while solving the sum. The new company will give 80,000 cash. So, for equity share, preference share and cash payment is also mentioned to you. So, here all details of payments are given to you. So, you can work out the total payment to be made to Shail Ltd. And you can find out the purchase consideration value or purchase price or the exchange value on the basis by net payment method. The Shail Ltd will pay the amount of provident fund to the workers before amalgamation. So provident fund are 3 lakhs and the cash and bank balance is 3,60,000. So from 3,60,000, 3 lakh payment will be made. So cash balance left with Shail Ltd after making payment of provident fund will be 60,000. So in a purchase consideration statement, cash and bank balance will be purchased 60,000. New company will purchase all assets and liabilities of the Shail Ltd. The following adjustments. Book value of fixed asset is 60% of the market value. So book value of fixed asset is 60% of the market value. So the fixed assets given to you is 60% of the market value. So this is 60% value. So 18 lakhs divided by 60%, you will get the market value that will be considered in a purchase consideration statement. 10% bad debt reserve is to be provided on debtors. Other assets and liabilities are to be taken at book value. Other assets and liabilities are to be taken at book value. This is how the assets are purchased. Now for Sheetal Ltd, fixed assets are to be valued at 40% more. So 10 lakh plus 40% excess, 140% of 10 lakhs is the value. Stock is to be valued at 5,40,000. Other assets and liabilities are to be taken at book value. Goodwill to be taken 2 lakhs. So you are given the value of goodwill. So details of all net assets are available. So here the purchase consideration statement can be calculated by net assets method, and on the basis of total purchase price calculated on the basis of net assets, we can find out the total payment to be made, and in light of that you are told that remaining purchase price is to be paid in cash. So remaining purchase price to be paid in cash. So amount of cash paid can be decided on the basis of net assets that we have worked out for Sheetal Ltd, and we can work out the details of net assets because we are given the value of goodwill 2 lakhs. On the basis of this, we can decide that the purchase price can be calculated on the basis of net assets, while in case of Shail Ltd, the purchase price can be determined on the basis of total net payment made to the vendor by the purchaser. The new company will issue 1,60,000 shares of rupees 12 each, and the remaining amount is to be paid in cash. 14% debentures will be allotted. Such number of debentures in a company bearing 10% interest per annum so that they can earn the same amount of interest. Now this 2 lakhs are the debentures, 14% is the rate of interest. So 2 lakh into 14%, they are earning the interest of 28,000. Now these debenture holders of Sheetal Ltd should get interest of 28,000, 14 twos are 28,000 at the rate of 10% after merger, after amalgamation. So we shall work out the number of debentures to be issued, which are on which the interest is given at the rate of 10%, so that the interest income of the debentures of the vendor company remains same after amalgamation. From the above transactions, above information, pass the journal entries in the books of Suvaas Ltd and also prepare the balance sheet after amalgamation. So we are required to write down journal entries and prepare a balance sheet in the books of purchaser. We shall prepare the balance sheet as per Schedule 3, duty sheet. Now I want to work out the purchase consideration. For Shail Ltd, purchase price will be calculated for Shail Ltd on the basis of net payment, and the missing number will be on the asset side, will be goodwill or capital reserve. While in case of Sheetal Ltd, we can work out first of all net assets and the deficit, the difference, the payment made. The balance payment is to be made in cash. So missing item is the cash that will be worked out. Now let us start. So here I am going to write down the details of net assets purchased. Here I am going to write down the payments made to the vendor. They have decided to amalgamate and form a new company, Suvaas Ltd, with rupees 50 lakhs authorized share capital of rupees 10 each. Equity shareholders will be given 4 equity shares at rupees 12 each in Suvaas Ltd. Suvaas Ltd is a purchaser as against 3 equity shares. 12 lakhs is the share capital, share of 10 each. So let us first find out the number of equity shares in case of Shail Ltd. 12 lakhs divided by 10, 1,20,000 are the number of equity shares in case of Shail Ltd. What is the exchange ratio? For 3 equity shares, 4 equity shares are given. How many equity shares need be given for 1,20,000? So 3 shares of vendor are exchanged for 4 shares of purchaser, how many shares to be given if the total number of shares are 1,20,000? So 1,20,000 into 4 divided by 3, 1,60,000 equity shares are to be given, and they are to be given at a price of ₹12. Share face value is 10, so 2 is the premium. So 1,60,000 into 10, equity share capital, security premium, 1,60,000 into 2, this is what has been paid. This is the payment given for equity shareholders. Now what is the payment made for preference shareholders? Notice it. Preference shareholders will be given 5 equity shares against 4 preference shares. Number of preference shares are worked out here. 8 lakhs divided by 10, 80,000 preference shares are there. So for 4 preference shares, 5 equity shares are to be given. How many equity shares should be given for total number of 80,000 preference shares? So let us work it out. For 4 shares, 5 shares are to be given. How much for 80,000? That works out to be 1 lakh equity shares are given for preference shareholders. So 1 lakh into 10. The share is given at a price of ₹12. So 2 is the premium. Security premium 1 lakh into 2, 2 lakhs. This is the payment made for preference shareholders. Now let us take care. Let us consider the debenture point. 14% debenture holders will get 15% premium. 14% debentures are 4 lakh. On that you are required to give 15% premium. 15 fours are 60. So this is the premium to be paid. So 4 lakh plus 60,000. This is the exchange value. So debentures are purchased at a price of 4,60,000. They are to be paid. Debenture of 100 each, bearing interest at the rate of 10% at 8% discount. So face value of the debenture given is 100. They are given at 8% discount. So exchange value of debenture is 92. So by giving 1 debenture, 92 rupees are paid. How many debentures are to be given for the making payment of 4,60,000? That we want to work out. So 92 gets paid by giving 1 debenture of 100 each. How many? What is the face value of debenture need be given to make a total payment of 4,60,000? So we are required to give the debentures of 5 lakhs. Now in a purchase consideration, we cannot write 5 lakhs. We have to write the exchange value of assets and liabilities. And the exchange value of debenture is 4,60,000. So in my purchase consideration statement, I will purchase debenture at a price of 4,60,000. So 14% debentures at a price of 4,60,000. When they in exchange, these debentures are going to be given. At that time, I am going to write down the entry, which you will find later on while solving the sum. But I spell out right now, 14% debentures account debit 4,60,000. Debenture discount account debit 40,000 to 10% debentures account credit 5 lakhs. That journal entry will be recorded in the books of purchaser that I will demonstrate after a couple of minutes. So debentures liability purchase at 4,60,000. The company will be given 80,000 in cash. So cash paid 80,000. This is the total payment paid. Now let us consider the details of assets taken. Shail Ltd will pay the provident fund to the workers before amalgamation. Before amalgamation, the cash and bank balance was how much? 360. Provident fund is paid. So balance left with the vendor is 60,000. That is being purchased. So in my purchase consideration statement, I will write cash and bank balance purchased at 60,000, and this provident fund is paid out, which I am not going to purchase now because it is already paid, cannot be purchased. New company will purchase all assets and liabilities of Sheetal Ltd. With following adjustment, the book value of fixed assets is 60% of its market value. So, if the market value is 100, then book value is 60 because the book value is 60% of its market value. So, book value is 60 and the market value is 100. So, if the book value of fixed asset is 18 lakhs, what is the market value means exchange value? Exchange value of fixed asset is 30 lakhs. So fixed assets are purchased at a price of 30 lakhs by a new company. Now 10% bad debt reserve is to be provided. Debtors are how much? 4,80,000 into 10%, 48,000 bad debt reserve. So debtors purchase 4,80,000. Bad debt reserve there against is deducted there from 48,000. This is how I write in my purchase consideration statement. Now, other assets and liabilities are to be taken at book value. So which are the other assets? Goodwill is going to be found out because I am given the details of net payment, total payment. Stock is purchased at 6,60,000. Debtors done, prepaid expense is 40,000. Cash and bank is already recorded. Preliminary expenses you can't purchase. So this is how assets are purchased. Look at the liability side. Provident fund is already paid out, so cannot be purchased. Creditors 5 lakhs. Debentures exchange value already recorded. So this is how the assets and liabilities purchased are given to you. What is the total value of assets? This is the total of assets. Minus liabilities, this is the net assets. For this net assets, this is the payment made. So here the purchase price is calculated on the basis of net payment, total payment. So total payment is this much, and this payment is made to acquire the net assets of 32,32,000. So 32,32,000 are the net assets purchased by making a payment of 32 lakhs only. So here the payment made is less. So capital reserve generated, capital gain generated 32,000. So this is how we have found out the capital reserve on the basis of total payment. So purchase price is worked out on the basis of total payment method. On the basis of payment method. So this is one way to work out the missing item on the net asset side. The missing item on the net asset side may be goodwill or capital reserve. Here is capital reserve. Now we are required to prepare same way purchase consideration statement for the another company, Sheetal Ltd. So now I will consider this Sheetal Ltd. Look at it. Fixed assets are to be valued 40% more. 10 lakhs are the fixed assets. So 10 lakhs into 140%. 14 lakhs is the exchange value for fixed assets. Stock is valued at 5,40,000. So stock purchased as 5,40,000. Other assets and liabilities are to be taken at book value. But before that, let me write out other assets. So goodwill, 2 lakhs. Bad debt is of 10% on debtors. Debtors 3 lakhs into 10%, 30,000 is the bad debt reserve. Debtors purchased at 3 lakhs. And bad debt reserve deducted there against 30,000. Now I'll consider the other assets. Which are the other assets? Look at it. Prepaid expense, debtors, stock, fixed assets, done. Goodwill is already given to me. Cash at bank, 4 lakhs. Preliminary expenses and profit and loss account debit balance cannot be purchased. Notice it. Now look at the liability side. Creditors are deducted to find out the net assets purchased. Provident fund is also deducted. And for 14% debentures, look at the statement. 14% debenture holders will be allotted such number of debentures in a new company bearing 10% interest per annum so that they can earn same amount of interest. So 14% into 2 lakhs. 2 lakhs into 14% is the interest that they are receiving in a vendor company. So debenture holders of Sheetal Ltd are receiving interest 2 lakhs into 14%. This is the interest they are getting. They want to have the same interest in new company, but the new company debentures are giving interest at the rate of 10%. So is equal to 10% of X amount. Now 14 into 2 lakhs 28,000 divided by 10% goes on the opposite side, so divided is equal to X. So 2,80,000 is the debentures are to be given. So the exchange value of the debentures purchased of Sheetal Ltd is 2,80,000. This is how the exchange value of debenture is worked out. The journal entry going to be recorded for this exchange of debentures. 14% debentures account debit, 2,80,000 to 10% debentures account credit, 2,80,000. So interest will be same. Now, new company will issue 1,60,000 equity shares of rupees 10 each at a price of 12. So 2 is the premium. So this is the security premium paid. Now, this is the net assets that I have worked out. Balance amount is to be paid in cash, as I have told to you. Already goodwill is there, so this is the net assets, 19,90,000. That I write on the opposite side. Here the purchase price is determined on the basis of net assets. And this purchase price is transferred to the opposite here on this side, payment. So to find out the amount of cash, what you have to do? 19,90,000 minus 19,20,000. 70,000 is the cash paid. So here this is the missing item, here this is the missing item. Notice it. So this is an important sum, wherein purchase consideration statement for Shail depends upon purchase price for Shail, depends upon the net total payment, and purchase price of Sheetal depends on net assets. That's an important point. After preparing this working note, I'll proceed with writing the journal entries, which is simple. First of all, I will write down the entries for Shail Ltd. Business purchase account debit to liquidator of Shail Ltd account credit. You can write narration in your own language. Now, business purchase, business is made of what? Fixed assets purchased. Debit what comes in? Fixed assets account debit. Debtors account debit. Stock account debit. Prepaid expense account debit. Cash and bank account debit. Then 14% debentures account credit. Creditors account credit. Bad debt reserve is credited. Capital reserve is credited to business purchase account credit. So this business purchase account debited got credited. It's closed. Now for this purchases, you have to make payment. How the payment is made? Payment is made to the liquidator of Shail Ltd. Liquidator of Shail Ltd account debit 2. This is the equity share capital given. 1,60,000 plus, 16 lakhs plus 10 lakhs. 26 lakhs. Security premium. These two, 32, 3,20,000 plus 20, 32 plus 20, 5,20,000. Cash payment is 80,000. You can write here bank account also, cash or bank account. I have written cash account. Better you may write bank account. This is how the entries for purchase of Shail Ltd gets recorded. Now I want to write down the entries for Sheetal Ltd. Business purchase account debit to liquidator of Sheetal Ltd account credit. You can write the narration in your own way. Fixed assets account debit, debtors account debit, stock account debit, prepaid expense account debit, cash and bank account debit, goodwill account debit, to provident fund, to 14% debentures, to creditors, to bad debt reserve, to business purchase account credit. So business purchase account debit and credit account gets closed. Liquidator of Shail Ltd, Sheetal Ltd account debit to equity share capital 16 lakhs, to security premium 20,000, to cash 70,000. Being payment made to the liquidator of Sheetal Ltd, this account 19,90,000 is credited, is now debited, so account gets closed. Now after recording the journal entries for purchase of business, let me write down the remaining entries for conversion of 14% debentures to 10% debentures. For that, these working notes you have observed. When the debentures were given to the debenture holders of Shail Ltd, 40% debenture discount granted was 40,000. So total of these three, 7,80,000 are the total debentures given, 10% debentures given by the purchaser, which includes debenture discount 40,000, and these are the 10% debentures. On the basis of this information, this understanding, let me write out the journal entries. 14% debentures account debit, debenture discount account debit 2, 10% debentures account credit, 10% debentures given for this 14%, 4,60,000 debentures purchased. Same way I want to write down the another entry for 2,80,000. 14% debentures account debit to 10% debentures account credit. So these are the entries to be recorded over and above the entries that we have recorded for purchase of business. Now capital reserve is to be adjusted against goodwill. So capital reserve account debit 32,000 to goodwill account credit 32,000. Now the remaining shares are issued by company at 20% premium. Authorized share capital is 50 lakhs. Share of 10 each. So what are the remaining shares? Let us work it out. So total authorized share capital minus share issued for purchase of business. So this is the authorized share capital, 50 lakhs. Number of shares are how much? 5 lakhs, share of 10 each. How many shares are given for purchase of businesses? So to Shail Ltd, the equity shares are given for equity shareholders and preference shareholders. So 2,60,000. Here to Sheetal Ltd, equity shares are given for equity shareholders. So these are the total number of equity shares given for the purchase of business. What are the remaining shares? Remaining shares are 80,000. They have been issued. They have been issued at 20% premium. So exchange value is 12. So 80,000 into 12, that is the bank, that is the cash received. Against the capital account to be credited is 8 lakhs. And security premium to be credited at the rate of ₹2 per share, 1,60,000. So bank account debit to equity share capital to security premium. This is how the remaining shares issued to public entry gets recorded. These are the other entries to be recorded over and above the business purchase entries. Now after recording all these entries, let us prepare the balance sheet. For that, first I prepare the notes on accounts. These are the titles under which the information is to be collected. This is as per Schedule 3. Fixed assets, non-current assets, tangible assets, debtors, current assets, trade receivable minus bad debt reserve. Stock will go in inventories. Prepaid expense, other current assets. Cash and bank will go in cash equivalents. But here I am preparing a working note to find out the ultimate cash balance. So cash purchase from Shail Ltd 60,000. Cash and bank purchase from Sheetal Ltd is 4 lakhs. Cash received on issue of shares will be added and cash payment made will be deducted. And that I am going to do in this working note. Now, goodwill minus capital reserve, we have already recorded the entry for that. So the balance amount of goodwill will appear as intangible assets in non-current assets. Now, these are the new shares issued. For that, capital account was credited 8 lakhs and security premium account was credited 1,60,000 while writing the journal entries. Now, total share capital. Observe. Shares issued 9,60,000 at ₹12. 80,000 shares are issued. So bank account debit 9,60,000 to equity share capital to security premium. Now what is the equity share capital? These shares are given to the equity shareholders of Shail Ltd. This equity share capital is given for the equity shareholders of Sheetal Ltd. These equity shares are given for the preference shareholders of Shail Ltd. So 1, 2 and 3, and these shares are given to the public. Total of this 50 lakhs is the equity share capital. Same way security premium is worked out at ₹2 per share. Here I should write the authorized share capital, issued and subscribed share capital with all its details. But as I am short of space over here, I just write in abbreviated form. But here you should write the authorized share capital, issued share capital, subscribed share capital issued for a consideration other than cash. You can write all this information in this working note. But just allow me to write in a condensed way, in a shortcut way, because I want to accommodate all these things on a small screen. So security premium done. Now this is the cash paid that will be deducted from the cash balance, and by deducting 70,000, I will find out the ultimate cash balance with the new company, 12,70,000. That will go in cash and cash equivalents. This is an important working note that has been prepared. Now I will write down creditors and liabilities, provident fund, long-term provision, long-term borrowings, 10% debentures, 7,80,000. 40,000 debenture discount will be deducted profit and loss account balance nil minus debenture discount. So there is a negative balance of profit and loss account. This is how debenture discount is required to be reported as per Schedule 3. Creditors. So observe, I have considered all these things. Now I want to prepare a balance sheet as on 31/3/2016. These are the titles as prescribed under the company law. You are well aware with these titles because you have studied company final accounts. Share capital ₹10 each, 50 lakhs. Here you can write detailed narration if you want to. Security premium, profit and loss account, debit balance. Long-term borrowings, long-term provisions, provident fund. Trade payables, creditors. Non-current assets, fixed. Intangible assets, fixed assets, tangible assets, then goodwill, then comes stock, then trade receivables, net amount, cash and bank, other current assets. Total of equity and liability, total of assets. This total should agree. This is how the balance sheet gets prepared. Now, I have prepared the balance sheet. This is notes on accounts. I have already recorded journal entries here before you. This is an important sum from examination point of view. So many points are covered in this sum. I think that you have followed all these concepts. Thanks to all of you.